Hello traders, Gary Wagner here, just about 12:30 in Honolulu, 6:30 in New York. It is Friday. Happy Aloha Friday, as we say on the island, September the 8th, 2017, and this is the Daily Report for Gold and Silver, our weekend review, and what a week we have seen. Although gold had a tepid upside move today, the week's move was respectable, and the rally continues. Gold closing at $13.51, up about 70 cents on the day. It did hit a new yearly high in trading last night at around $13.62. And of course, our long from $12.99 is still in place. We will discuss that in detail when we pull up our first set of charts. Silver sold off a little bit, closing off about 8 cents on the day, but still remaining above $18 at $18.03. And the dollar continues under pressure. It is still in a free fall, although the pace has slowed down a little bit, off 31 points today. It did close below 92 this week at 91.32. Mixed bag in U.S. equities. Dow Jones 21,797 puts it up 13 points. 37-point decline in the NASDAQ at 6360, and a 4-point decline in the Standard & Poor's at 2461. So traders, even with today's tepid upside move, with gold closing at $13.51, only up 70 cents on the day, this week has resulted in yet another dramatic climb. We can see that on this weekly chart, in which we touched at a new high. And that new high, 1363, a all-time high for the year, 1351. That's represented by this particular top on this rectangle here. And we have seen this market continue this rally, which in essence began mid-July of this year. We are still active in a trade. We went long on this trade below 1300, and now we have about $50 worth of intrinsic profit, as long as we can hold on to that. Earlier this week, we did go ahead and move our stop up. Let's go ahead and pull up a daily candlestick chart, and we've got a couple of different areas marked off. Of course, we went long at $12.99, just below this particular point here. Initially, we put our stop just below $12.80. As the market moved within our favor, we had a couple of different places that we moved our stop to, and currently, as of just the other day, we moved our stop to just below $13.34. So regardless of what the market does, we're going to get out with a pretty decent profit on the trade. But traders, I do believe there is a little more in store. And traders, we are looking at our daily chart that I've highly compressed, and we have a couple of fib extensions, and we have an interesting harmonics that I want to spend a couple of moments talking about. The fib extension that we have really been looking at begins at 1200, takes us up to these highs at 1280. It then follows down to this correction and uses this point as our starting point. From there, we mark out various levels, our one-to-one relationship, our 1.23, and then our 1.618% relationship. Now, I've also added yet another extension. It begins at 1120 at these lows found at the end of 2016, up to this, what was a triple top. We broke out on the third time at 1300, and it then starts at that same starting point that we began the other extension at 1205. Now, this is what is fascinating. The harmonics that I'm talking about as follows. We have this top here that was last year's high. Last year's high came in at 1380. This fib extension gives us a one-to-one relationship. In other words, this wave and the next wave, a one-to-one relationship, takes us to 1380. That harmonics is where this shorter of these extensions, meaning the one that really covers this area here, has the same price point, 1380, but in this case, it is a 1.618 extension. That also matches up quite eloquently to the highest high we have seen this market trade to since it went from a bear market into a bull market. And that, to me, gives this particular number right here, 1380, some real strength. And I believe that that is where gold will trade to in the very near future. There's no doubt we have seen a tremendous surge in gold, and a lot of it is a direct result of events such as North Korea, the debt ceiling, which was resolved, or I should say that can was kicked down the road till December, a 3-month reprieve, chaos in terms of our current administration. Those things have absolutely been affecting gold and being an underlying motivating factor for higher pricing. However, it has been the falling dollar that has been the single greatest underlying effect of the dollar, because we pair gold with dollars. We have had a fall from grace in which the US dollar has fallen from just below 104 and now has broken 92. And 92 is a very significant point on a technical basis, because we have historical reference of points of time when that particular price point, 92, provided support. Now that we have clearly broken below that, the free fall could actually be accelerated. My next target is really 88, which is quite a ways away from the dollar index. But what is alarming on this chart is if we look at this dramatic rise that occurred back in 2014, where the market went from 79 up to about 100 and reached a high back at the end of last year of 104, there's really no area in here that has strong support on a technical basis. There is a little area right here, and then there's another area right here. But other than that, we pretty much had a parabolic rise up. So my concern is that we see a defined continuation of the dollar in a free fall, but at an accelerated pace. My recommendation is obviously to maintain our current long position. We're going to maintain our stop right now, and then we will look to see how gold reacts at the beginning of the week and make our decision as to whether or not we feel it's right to add to that position or simply tighten the stops and look for profits. We'll take it from next week's opening bell. Traders, the truth of the matter is one never knows when a market will run into a raging rally or sell-off, a protracted rally or sell-off. And for those that are specifically playing gold from the long side, it is a matter of positioning ourselves properly so that when that occurrence unfolds, we can profit from that. And that's exactly the case as to our trade that we have now been in for 2 weeks. We got long below 1300. The market's sitting at 1350. We have stops at, I believe, 1332. I believe we have a significant and high probability that we'll see gold track to 1380 with the possibility of 1400. If in fact it continues to rise, we will continue to raise our stops and glean more profit from this trade. This has been Gary Wagner wishing you as always good trading. I'm so happy we were able to deliver that to you this week. Have a great weekend. We'll talk to you on Monday for another daily update and review. Bye-bye.